Greetings, market rebels. Welcome to this week's macro measure video. I'm Wayne, my partner Ryan's working on some stuff somewhere. It is Sunday, April 2nd, 2023. And excuse me, going to flash our trusty disclaimers, and then we will get things moving with just a quick recap and a view of what I'm hoping to cover this week. And as it has been through much of 2023, I think it's just been an absolutely fascinating year. Now the intellectual property rights notice, excuse me, and this was, this was last week's planned program. And I'll leave that up there for a while, but these are some of the things we noted last week. I've kind of edited those a little bit just to kind of reflect some things, but this is the kind of ideas that we shared. And what I wanted to just talk about was a few things, which were, we really didn't have a most likely scenario. We really said, let's wait for a break out of the triangle, up or down. We noted that the bulls we've seen a lot of volatility and markets were not easy to trade. And we also noted that the bulls went from zero grasp last week to the prior week to having a slight grasp. So they kind of reasserted themselves a little bit. And there was a little bit of shenanigans and things like that. But we've seen the shenanigans. We've noted that we saw the shenanigans turn into legitimate bullishness. And maybe legitimate's the wrong word, but further bullishness is probably a better way to put it. So window dressing potential, we discussed that in our TNT, and I think I mentioned that too in the videos that we did last weekend. And of course, I think a lot of things really added to last week's performance. There's the triangle, I should say break, typo there by me. I think what happened now that we look at things is that financials didn't crack, right? And the crypto continued to hang in there. And so those are some things that were going on, precious metals that we talked about, I think more so in sector situation, but maybe even mentioned in macro measure. Those to continue to try to work their way higher. And the way that we really saw things last week was about sentiment, liquidity, right? Being favorable for bulls, that is, and then versus all the bad econ and fallout that I think is on the way, and a lot of us think is on the way. So that was sentiment was overly bearish, and then we were talking about maybe there was some of the Fed money making it into the market, and we noted for the longer term, right, that a lot of these other factors were not in our guesstimate, right, not really fully priced in or just being ignored. And I'll hit on this again, but I just keep, to me, this housing market is so critical for the US consumer, and that affordability being crushed, all that kind of stuff that we've talked about. I think that's just a recipe for really rough stuff. But let's see if there's anything new here. We did say expect more volatility, and really we got that. The final note was basically, right, bull and bear trap still looking, or both were still looking possible. Stick with singles and doubles mentality until we see more price action news and data. And I think what happened there, which I'll advance to this side, the next slide, excuse me. This is what we're covering this week, and I'll just leave it up there. And I think what I'm going to do, though, is just leave it up there for a few moments. If you want to screenshot it or whatever, I'll try to cover this stuff. If I don't, because there's so much going on. And I mean, I think this may be the worst macro measure I'm ever going to record to this point in time because of how many things are out there that I think I should at least show briefly, and that folks should be aware of, in my opinion. So this is what we're going to cover. And I'll do this off screen, so just bear with me while I stop the share for a moment and rearrange things properly, because my screens tend to get different applications tend to look at the things differently. So let me just get this minimized and get some things over here for us to look at. And this up here, I'm not sure why that's doing that. Okay, just go back here, please. All right, there it is. Yeah. So we'll cover this week's stream. So let me get, it's odd that it's just being sticky. So why is that? It is just going still in, it's still in sort of like this presentation mode, which I've removed it from, but it just keeps reverting back. So sorry about that. Let me get the right screen shared for now. That's going to be our spiders screen. Are they calling this 2? Okay, this is now screen 2, which normally is screen 4, but I think we're in the right place. So this is the quick kind of technical review, and this is what we were talking about in terms of the SPY triangle, which we use the SPY as the proxy for the market because people like to potentially trade or hedge based on levels we put out in SPY and instead of SPX or other things. So it is what it is, right? Nothing's probably perfect, but I still think S&P 500 gives you a better sense of what's really going on in the market. But this triangle we discussed, and it probably looks a little more impressive on a daily chart, but you get the idea of once you got beyond resistance, what happened. And I think a lot of the things we're going to talk about will show, what may have helped that. I think one thing that may have helped it just off the top of my head is the 0 DTE. We were talking in Rebel Pit here on Tuesday about, and you can see the triangle obviously fairly well, I think, on this daily. And we were just saying, like, trade it, for singles and doubles, maybe a double, more so than getting a lot of doubles, but just get, figuratively speaking, just get a couple little wins in here until this thing leaves. And it did. And I think what happened here, this Wednesday was the day that it launched, but I think there was some massive 0 DTE that traded that day. And the way that this day unfolded, I think a lot of options that were in the money puts and out of the money calls, they had far different deltas right on that down here. And by the time the gang was able to work things back up to where they did, that is when I think it was really a big time difference maker there. That also I think played into this here, where again, there were some slightly out of the money puts that market makers potentially were having to sell, and they were short stock against that. Those deltas, the deltas changed obviously through the movement. And so those out of the money puts didn't hold the delta. And so there were a lot of, I think, dealers, AKA market makers, kind of caught short based on that. And also from the fact that they were potentially short some upside calls as well that were just slightly out of the money. And we were talking about how this could create an imbalance. And it seemed like that maybe helped the case. I can't say for sure, but I just kind of noticed that through some discussion in Rebel Pit. And we were waiting to see if that would kick in, especially with the window dressing background. And so it seemed like it did. And again, just to kind of pull some stuff off of the PowerPoint slides, right? We noted that bulls were kind of had a failing grasp on things, but that things were looking pretty rough for them coming into that Friday. There's the prior Friday right there, but they reversed it strong, and it felt like a waft algo to me, where they were just, it seemed sketchy. I wasn't really a big believer in it in terms of I would be a rabid bull because of what I saw there. It was more like, this is more of that control the market, relentless bid thing. But fortunately, right, we've noticed that a lot of these kind of initially seemingly bogus things turn into more. And so that's why you still probably have to respect this stuff. You had the end of Q1 window dressing extravaganza that really kicked in, along with the 0 DTE shenanigans. And so that is part, I think, of what happened. Now, the scenario for this week, which we'll come back to, the scenario for this week is right now I've got the SPY on the 1 hour at a 79 RSI. And I could pretty much get similar readings for the Qs, and so on and so forth. So there's a lot of stocks, obviously, individually as well. So my way of looking at it right now, and this kind of skips down to probably the last point on the PowerPoint, is that I think you're short-term overbought. Clearly, it's without question on the heavier duty, some heavy duty intradays. Daily is definitely approaching overbought, but it's not quite there yet, right? So there's still room to go. So I think the most likely scenario, again, absent any news that we really can't account for, is that you have some sort of a pullback, and then to take some of that froth out, and then you see where things find support, and if they try to go again. And if they don't, they just keep working it back down, then they keep working it back down. Remember, there's a lot of gaps, and gaps that fill, most of them fill within five sessions, including the gap session. That's what we've been able to determine over the years. So if they don't fill after 5 days, right, then we just don't care. Like, we're just not going to factor it in at that point until the technicals say, hey, this thing's rolling over, and this may matter again, because gaps do tend to be magnetic. So that's what we're looking at there. Now, this gap actually got filled, that was there for a little while, right? That's from 216. That actually came back into play. And then when you get to this point and they gap it up again, that's what I would start thinking. I'd start looking back and say, oh, there's a gap there, and that could end up helping power this thing up. But what ended up happening as well is the 408, we said if it gets through this level, then that level, yada, 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 like we always do, because we trade it incrementally, and we just look for the next important level. And it got right up towards our big number, right? We said 408, 409. It actually got above 409 a little bit, but the point is that it made it to our kind of big number we've been watching for a while. I should say big level we've been watching for a while. And so could it go straight through on news? Sure. Could they engineer another gap up? I certainly wouldn't put it past them. If they gap this market up significantly, though, and this was another point of discussion in the pit, I would personally, I can't tell anyone what to do, of course, but I would say, look, I said what I would do going out would be to close most of my position. By that, I mean about 70%, give or take a few percent, whatever. And then I'd hold maybe 1/3 or a little less. And then that third that I held that were of longs that were working, I would overroll them, which means I would get out of the money with them and have something really closer to 30, 35 delta in the near term, not longer dated options. And then I would, if they do gap this stuff up, right, significantly, I would keep it on a very short leash as a bull. And once I start to see some possible loss of momentum, right, some of the momentum's peaking out or petering out, I would just take the money and run at that point and just look to reset, because you can always get back in on the trade, right? You can always get back in. And without news, it's going to be, I think it's going to be really hard to take this in the short run into further. You would be really looking at extremes. And the last few times I've mentioned this scenario, this early week scenario, that's exactly what's happened, as a matter of fact. So I think you have to pay attention to your hourlies, maybe your 2 hours, whatever you like. But when they become extreme on RSI or whatever your preferred oscillator is, there's a reason why, you don't usually see RSI ever really get to 90s, except for very extreme cases. So when you get towards 80, it's already pretty darn overbought in the short run. So I think that's the most likely early week scenario. Then we have to see where the support would come in. And then if it does and they start taking it up again, right, I would be inclined to go with this, because we've been talking about this alternative sort of like super double secret bull trap that could happen. And I talked about this on Cocktail Hour with Dirk, and this has been my contention for a while. And we've got Daryl, who's one of our customers, a market rebel, and he's been all over this as well. I think it dovetails with how he feels, but he's a long time, market participant and, pretty sharp guy from what I can see. Hope to meet him someday. But this is your level in my mind for the super double secret 0.0 bull trap, because if they get it above there, people that were worried, like, people that were skeptical, here at these levels, when this high got taken out back here, they held on, and now that seemed to work for a while, but now they're back under having to worry about this high being eclipsed. If this high gets eclipsed, and then this high gets eclipsed, and then this high gets eclipsed, it's going to be really hard to find a technical bear, I think, at that point, unless, of course, it's just extremely overbought in the short run. But at that point, if we look at the bigger picture, let's go, probably would help to go to the weekly for this one. And again, on the weekly, you see how this triangle played out. And like we said, I think we played this the right way, which was take what you could get while you're in here, but once they push it, try to go with it and see what develops. And of course, you know, they developed it in a way that was just kind of crazy, but that's the modern market. But when people were asking me, and I couldn't really answer the question, they were saying like, you know, what's your level for saying that the bear market's over? And so this is where I think it becomes a little bit of art, because to me, I still wouldn't be ready to ring the, we're now embarking on this 5-year bull market, even if it got above here and closed near this 431, 432 level. I just wouldn't do that. I've seen these guys kind of forestall the inevitable too many times. And so would I trade it bullishly up until there? Sure. Would I even trade a breakout through there bullishly? Yeah. Because right, if I'm watching things all the time, I can adjust when I need to, right? I'm just going to be a very diligent roller and trimmer. I'm just not going to go bonkers, right? Because even after bull markets start, and that maybe that is the start of a bull market, ultimately we find out that it was, or a confirmation of the start of a bull market, there can be pullbacks, right? There can be pullbacks. We see it all the time. We talk about stocks going through resistance and then pulling back, finding support, converting former resistance into support, and then launching from there. And it's a very common occurrence, you know. So, but right now, you've just, as much as it, I think it's been very kind of dubious, sketchy, whatever you want to call it. Right now, like the bulls, we said last week, they kind of barely hung on the prior week, got a little tiny bit back. Last week, they maybe added a little bit more of control, and then this week, right, they probably pushed their luck and their control. The way I look at things, the bulls really have turned things around dramatically. And of course, that only makes sense when you look at this kind of a massive move in 3 weeks, right? That's a pretty strong move, not the biggest we've seen, but it really is a strong move from low to high in just 3 weeks. So of course, it's going to look better for bulls, but I still would say, look, if they take this out, the way that I would be convinced of it would be that all the econ that I'm concerned about, all that macro econ starts to really look like it was basically the opposite of a false dawn, I guess a false twilight. So that's when I would say, okay, well, the price action's telling me this is a bull market. And now look, these things are ameliorating. If they're ameliorating and sort of things are perking up again, I don't care that I didn't buy the bottom. If I'm going to be in a bull market, which I hope we do convert into a bull market, I really, really hope that. But I know we're going to have years of, more than likely, if it's a legit bull market, and the 20th century bull markets lasted about 5 years on average, roughly speaking, that we have many years in front of us to trade in a bull market, which is awesome. You know, for me, I know AJ feels differently about it, but I'd rather trade in a bull market every time, because this is what bear markets have been like. And I've actually done well in bear markets, but this is what bear markets have are like, right? They're not easy. You don't get that really steady long-term uptrend that you can just keep going back to the well as a bull, and you know, you keep placing bet on bull, and more times than not, and you don't fight the trend, and you can do very well here, right? It's all about being really nimble and just embracing the momentum as a trader. More so here, I think you can even make a lot of mistakes here and still come out ahead, whereas here you can be really sharp, and if you overstay your welcome, they can take all your profits back in a heartbeat. Things like that. So it's really, to me, not easy to trade in a bear market compared to a bull market. Like I said, I would take the bull market every time, because a lot of garbage goes bonkers, and we saw that in the prior bull market, and we were able to get incredible returns in UOA Pro. I'm sure Rebel Pit would be doing the same. UOA Pro tends to be multiple days to multiple weeks. So the rides were bigger there, and some people caught just incredible things happening in crypto mining, all kinds of things. The AI, one point, there was also EV things, and the returns were just extraordinary. And so I'd rather have that environment where it feels like the happy hunting grounds, and that's it. But my new number that I would sort of throw out there would be, if they are able to push it up, I think somewhere between this 416 and 418, you can see where that kind of brings you into where there's a couple wicks that exceeded that, but there's also like an opening near there. There's a gap down just above there by a little bit. Coming over to here, it barely misses a few of the wicks. It barely misses a high there. This wick gets barely missed. This wick's almost dead on one of them. And then you've got some opens, you've got some closes, and you've got some wicks all in that vicinity here. So there's a lot of touches, in other words, and that would be another sort of challenging area in my opinion. And then once they get through there, I think you're looking at, we've done this before, but we probably need to refresh on it, 425. And then then we look at my 431, 432-ish, call it 431.50, just right about there. It's right about there. So on this weekly chart, it's right near there. So that's the next level for me. But I think if they get it that far, if it's not, if you're not looking at like 85, 90, some crazy number on RSI at that point, if they take it up there, the way they do it, the path, of course, is what we're talking about, and how quickly that were to happen. I think there's a good chance they're going to bust that through, because I think a lot of people there's enough players out there that would say that's it, right? That's why I'm calling it like that to me is like the backbreaker, where technically a lot of people I think would capitulate. I could be wrong. It's not like I haven't been wrong before, but just some of these things that I've seen over the years that stick with me, and I really can't give you, well, here's the empirical data. I don't have the empirical data on that. Unfortunately, we don't have access to that kind of stuff, but I've seen that kind of backbreaker thing only to see incredible reversals. I'm not predicting it. I'm just saying I have seen it. And if I kind of have it stored in my cellular memory the way that I do right now, then there's a good reason for that in most cases. So that's why I'm thinking that's really it. People are going to really be talking themselves into things. But let's kind of come back to the charts. I probably did more than I expected to on that for now. What I really want to do is talk about the risk going back on first. So if you want to say that we'll do more of this in sector situation, I'll record that as soon as I can. I just had to start recording because once again, it was overwhelming. There are so many things. I just can't I can't cover all this individually. Even Ryan and I, like Ryan's got his own responsibilities, and we do the best we can to cover things, but it's just right. It's sort of like this could really be a full-time job, and it is for some people. And so we're doing the best we can with what we have. But you can see, I mean, I don't really have to say much here. You can see how they jammed everything back. And that doesn't make a lot of sense to me, other than the fact that, right, this was a squeeze. This was I think some people were poorly positioned. I think some people thought that, think the bottom was close to falling out, which I think it could have. I mean, you just never know. But a lot of people position themselves for these things, and it makes macro sense to them. And then the gang pulls off this kind of a maneuver. And, these moves cleared out, like looking at discretionary, for example, that move cleared out a lot of former resistance going back here, there, and everywhere. And now they've got a higher low put in, right? So I don't want to read too much into this. I do think this is dubious at this point, in my mind, at least. But you can't deny what they've done to important areas. Even XLF got brought back quite a bit. So the real estate, financials, transportation, that all got brought back strongly, as did industrials and basic materials. We don't even have to talk about tech. We all know what happened there over here. So you can't really say that they didn't buy everything they did, but I think in a way that's a bad thing. I think them buying everything is really not a good development. It tells me more that it was just about positioning. So I think this would be a good time for us to get into my my tabs that I've got set aside. So I still continue to think this is about these bias factors, right? We've got this idea in place that the Fed is going to be peaking out pretty soon. And I guess I should show that first, but I'll come back to the start of these. But the idea is, right, that the Fed maybe goes up a little tiny bit more, maybe in May. It's kind of split that they go up, you flip a coin right now. But if you notice by September, I believe they've got the probabilities slightly favor going down from there, slightly. So that's the expectation. I think this is everybody front running what they think is the great development that the Fed will be lowering rates sooner than later. I think they could be disappointed on that. And I also think that it hasn't really been great when the Fed starts to do that, as we know. So that's, to me, like you've got to trade in the here and now. But what I'd like to do is sort of show the biases and the sentiment on why things potentially played out the way they did. And then I also want to show you what I mean when I say sentiment and stuff like that. I mean, just the fact that something like the financials not imploding when there's so much potential for problems to develop, not only do they not treat that as like a concern, they kind of like use it as a positive, right? Oh, hey, they haven't imploded. Here's a view we've used before, but slightly different. But the point is, right, remember, we're still in year 3 of the cycle, the presidential cycle. And that year, which I had, this kind of it's a different view of it. But we just, right, like we really came into the sweet spot there late last year and in the fall, really. And that's the sweetest spot, right, for performance. And you can see, right, if we go back to our SPY, right, this goes back to October, and they've done remarkable job in the fall, right? The fall only starts like 20 days earlier than this officially. And they've done a great job of lifting the market up dramatically since. So this is primed to potentially go. And that's from the Stock Traders Almanac graphic that I was able to find. And just on another note, when the bears, a lot of these bear markets end in, you can see where they end. I don't have to really say much about that graphic either, right? So I'm trying to be very objective about this, despite my own econ takes on things. This is the one we've been using more than anything else in terms of what happens. And this kind of got off track early in March, but they've managed to put it back on track for the green pre-election year, right? Meaning the presidential election occurs next year. And you could see what happens really over the next 6 weeks. And so that is part of, I think, some of these things you've got to keep in mind. It's not like they help you moment to moment or even day to day, but you've got to, this is why I think you've got to read your charts in a context that's larger than the chart itself on when you're looking at the major indices and things like that. And I made that point on Cocktail Hour as well. So remember, this is a strong year overall before we jump too far ahead. And I think this is another part of that. I tried to emphasize this when Dirk wanted me to do a little talking. And you could see the 20-day, the 20-day, the percent above the 20-day. And you could see, we talked about this, right, a few weeks ago. And you could see where they were. And we noted, right, that you just never know what's going to happen next. But this is a level from which the gang's been able to launch their rallies. And this is clearly, right, a furious rally that produced many, really the percent it really screamed. I mean, it's an incredible turnaround. We've seen these, right, happen a lot of late, right, in the last 15 months, I would say. There's been a lot of this up and down, as you can see right there. So that's why it pays, I think, to pay attention to this stuff. And kind of know the backdrop, like, hey, there's a lot of stocks that have really gotten smoked. Normally what happens, right? The market tends to revert, and you keep that in your mind, and then it'll keep you, I think, out of trouble by getting like overly bearish or overly bullish after there's been a dramatic, move in that direction or the other. Stocks above the 50 are even improving. Okay, so you've got that happening, right? And that takes a little bit longer because stocks are probably too far below in many cases. So they have a lot of room to run where they can overtake the 50. and probably right, even less of them were able to do that on the versus the 200 percent of stocks above the 200. But notice, right, that this low, this kind of double bottomish low we talked about, I think, and this low back here are about the same level. So they didn't really let a lot of things correct as they have. So you would have to say that the market's sort of firming up a little bit, and you could say really probably this low here, this from the summer through early fall, I should say summertime through July, that maybe marked the lowest low. And then you had the double bottom effect here on things back in late Sep, and they've been really changing the trend. You could see that the highs are getting higher and the lows tend to be getting basically higher as well. And so you could see the trend is changing on that. And the trend, by the way, was really deteriorating for a long time in the face of everything. And that was before all hell broke loose to the downside in 2022. So that just gives you a little bit of perspective, but that's why I like to cover these things. We noted that we were in extreme fear, right? And just a few weeks back, let's see, 1 month, where was it? Oh, we need to go to the timeline. Maybe like 3 weeks ago, 2 or 3 weeks ago, we were in that area, and here they go, right? They come right back for them. It's very interesting how the news can be taken too and used to support what they're doing, no matter what it is. And that's what, in my opinion, that's exactly what they do. And the compliant media that is there to really assist the whole situation does their job for them as well. In most cases, that's why I think some individuals that put some good stuff out on their own sites, on Twitter, through other outlets, that's what we look for. But we noted that it's again the case here, right? That there was pessimism was above average for the 6 weeks. So last week there was as well. So this is another week of just pessimism. And I'm not looking at this right now. I'm really looking at what they have to say here. And so that helps, right? It's the contrarian situation that helps. This is why you always hear us talking about kind of like the plumbing or what's going on inside the market. And we, I believe, discussed this as well, cocktail hour, webinars, macro measure, sector situation, right? People short positioning, extremely negative, and look what they're able to do, put the screws to everybody, right? We already took a look at this. I don't think much is changing, right? It's kind of coin flippish after May, where, well, even May is somewhat, May is coin flippish, but it's coin flippish in June, coin flippish a little bit there, where it's tough to really say, well, you pretty much expect by June, things are expected, I guess, stay put. But like I said, it becomes a little bit more likely, according to the markets and probabilities right now, that things peak out and start coming down by September. So, that's where maybe some of the data is there. Now, this here, we showed this last week. You could go find this for yourself, but this is just something, I think, this big shift of where a shift of the term structure, right, of the Fed funds. This is really dramatic, right? Where we were at one point this year really looking at things peaking out, then things were looking pretty bad on inflation data. And then, right, so the story that ended last year was kind of more dovish, and then it got pretty darn hawkish, right, with all the inflation data. But then you had this remarkable, right, just absolutely remarkable move lower. And so that's where that's where you kind of ended up on that video. But I don't want to belabor that, but that just gives you that sense of where we've been and why people are maybe trying to front run the lower rates that are coming soon, according to market expectations. I also want to note, and I've got a whole other group of tabs to share, unfortunately, or fortunately, depending on how you look at it. This is also happening, right? So you've got this all over again, right? They're not playing games that they're going to just keep this thing fueled right now. Like you can see these buybacks are pretty significant. So that's what's expected. So that's going to potentially help the situation. I think to me, like, it's a little foolish, but that's modern corporate America, right? So nothing we can do about it. I'd wait for stocks to really find a more reasonable level and then buy back, but that's me. So here's your record buyback authorizations. Corporates are in their buyback, but will start to exit it in the coming weeks. So there's going to be a bid for stocks. Okay, but another added bid for stocks. So make of it what you will. Notice how things flipped around with this one, where their asset managers had a plus 15% buy skew, the highest since 2023, and is the 91st percentile. We have CTAs as buyers of 20 billion of U.S. securities over the next week. So this just came out. So CTAs may be flipping around and more, and they may have to go in for some. It's not enormous, but just gives you an idea where they were really more or less net sellers, and they became significant buyers. So things are really right. Things are really flipping around dramatically. And that's why, right, even though we were trapped in a triangle, we did see like moment to moment volatility, gapping volatility, stuff like that. So here's where there's at CTA's positioning is bearish right now, right? So you can think of this as like, the kind of like funds, right? Quantitative funds and things like that. So they're positioned poorly. This is what I keep mentioning when I say ill-footed or poorly positioned or something like that. Well, this is, you can check this out here. And then if you look at the other graphic they've got with it, then you've got, this is consumers as well. So in the face, right, this is more contrarian stuff that you would say that in the face of things, they are able to work their magic, right? This is really what they do. It leaves a lot of people scratching their heads. It's not a shocker, right? It's not a shocker because most people, I can understand why they would want to be scratching their head when they look out and see the realities versus what else is going on. Let me see. That's this one. Let me see if this is it. It might be this one here. Yeah, this is it actually. So I wanted to also show you everyone these. So this is interesting, right? Where the quarter began with this dramatic burst of new highs, but look how new lows finished above new highs in the last 33 days. So they really took advantage of the market wasn't really behaving very well, right? Of late, we were noting that, and then we just noticed the bulls had virtually lost all grips they had on the market, but they clawed right back and came after them. But still, under the surface, right, in some ways, this really wasn't all that great. So again, I think it's another kind of really dubious rally, but these do start out this way sometimes, and then they carry on. This is one of our trusty ones, just to kind of reiterate that, right, the LEI, leading economic indicators, this is kind of like the bear tabs to just kind of go along with the bull tabs we covered in the prior browser window. But this is really the situation is as most recent as I could get it. So I still think things are tailing off. We noted this last week, the Fed was bracing for a recession. This is what I wanted to get to for kind of updated data. The city card spending, March to date, is down nearly 9% and is set to be the weakest pace since April 2022. So you get rid of the food and it's down 13.7%. So geez, that's not good. This is where I keep saying, like, it's bad stuff is going on and it's being ignored versus the internals of, hey, these people are poorly positioned, sentiment's poor, we can create a squeeze. They do, right? So that's what I'm trying to paint for everyone, so everyone understands what we're talking about, at least the way we see things here. And you can see that, look at the probability, right, for US recession calculated from the yield curve. I don't have the calculation. I'm not exactly sure what they're using, but this is coming from the Federal Reserve Board, Federal Reserve Bank of Cleveland. So this data is, at least. So the probability of recession is nearly 64%. You can see right? This, every time you've pretty much gotten up to that level or higher, you've been somewhere near, put it that way, near a recessionary period. Okay, so what happens next, I don't know. We did note this last week as well, that these, the commercial mortgage-backed securities, nobody wants them. Maybe that picked up a little bit. That's just still painting this bigger picture of generally what's happening here. Want to note this real quickly, right? That we talked about this, I believe, last week, but just to remember, like, for the way I see things with housing being so important, right? It's owning a home is trading at the biggest premium versus just being a renter that we've seen in at this point 17 years. So that's pretty darn pricey relative to rent to buy. So I don't know how many people still want to do that here, and if they even can, given where housing prices are, given what mortgage payments would be with these rates the way that we have them. So it is what it is. But this was also another one that we found from Lance Roberts. So here's the percent of 10-year yield curves inverted. And you could just go back in time when this data has gotten to where it is. And this is extreme. Whenever you've seen these, you could see the market there, what happens to the market there. The market managed to kind of neutralize that one. There was a sell-off here, sell-off there. You get the idea, so take it for what it's worth, but there you go. This was an interesting tweet from this David Settle guy, based off of what this Ryan Dietrich guy was putting out. There's only a few examples here. I don't know if you can draw a strong conclusions from things like this, but they're looking at it. Basically, everyone seems to be convinced, right, that this means the Fed, the way that the market's been acting, it implies strong forward returns. And essentially, right, the Fed will have to cut rates because something will be seriously wrong if this doesn't happen. So they're looking at, like, other people, and I'm not taking a shot at these guys, but they're looking at it win-win, right? They're kind of saying, like, this is either we do what we've done before due to how the market's performed by looking at it in several ways. And if we don't do that, that means there's something really wrong, and the Fed's going to have to start going the other way anyway, which is good in their minds, So, and I'm not speaking for them, but that's the mentality, not necessarily these two individuals, but how a lot of people, I think, are thinking about it. Just to show you where you are, and this is, well, again, why I would not be doing share buybacks here, but that's me. Tech's PE now jumps so much that it trades at a 38% premium to the S&P 500, which is higher than the pandemic bubble peak. So, why I think it's irresponsible to pay that kind of a premium for shares of your company, but that never stopped anyone. And then finally, I'll mention this, where if we look at these, and I will go through these pretty quickly, most of them, if you look at those, you'll see that a lot of them are short-term overbought, just like we said about the major index ETFs, but they also all have a technical look to them that suggests potential, and I think that's what you have to, given how they move. Essentially, you move the major market ETFs like SPYs and Qs and IWM and diamonds and so on, that if they're looking to go, then you should go with it. Now, if you should appreciate that and be ready to go with it, because if they go, you probably do get the indices going. You probably get a buoyant market. And just notice, right, that we're getting like this sweep up in our very simple basic indicators here that are showing bullishness. And when you normally get this kind of right curl higher, you don't normally get just this false reading, right, where it just, if you're putting your price structure is looking more constructive, which it is. So this could be carrying on. If you look, when you go from red to white or red to green, you can see that there's several weeks of attempting to run. And so now I can't predict that. I'm just saying that this is what typically is the case, and we have to respect that, right? So I think it will take news. I think if you want to be, put it this way, if the market pulls back a little, takes some of the short-term overboughtness out of it, and then finds footing and tries to go and break out again from a lower, much lower RSI readings, with all the third-year presidential cycle, with the returns that we saw for April and May, that tend to happen in April and May is the sweet spot. And the way that a lot of people are poorly positioned and buybacks are coming online, and they're going to have their EPS beats where the street lowers the bar for what they need to jump over, and they jump over and everybody celebrates like it's some great accomplishment. It's the equivalent of the kid that the super rich kid that everyone always used to talk about, the kid that finds himself on third base and thinks he hit a triple. It's really not, it's not what it would appear to be, but that doesn't matter, right? What matters is that gets pushed into the narrative, and it gets everybody feeling like they're missing out, and then you get FOMO, you get capitulation. That's kind of a scenario that I think we have to prepare ourselves for, potentially the way things are shaping up. So let's look at other things. It really won't matter that much, which is why I dedicated so much time to what we have so far. If we look at the QQQ, actually, let me go back to spiders and I'll just tick off current short-term RSI. So you could see daily RSI still has some room on the daily. Oh, I don't know why it took me back to Q. SPY. There we go. Come on. There it is. Okay. So 62, which means, you've got some room. You're trending towards overbought, but you're not getting there yet. You did leave this big resistance line in the dust for now. So you can't really argue that the bulls, technically, they haven't done some good work, and they really rescued it, I think, from the brink, like we were talking about back here, where I think it was on its way potentially lower, and it didn't. Again, they just came in like gangbusters. Notice how this was accomplished. Look at that. Look at that weekly volume. Daily volume. Doesn't even matter, right? That they're really not buying. The last day, give them a little credit, but notice how the volume is much larger in here, right? That's just not that impressive. But again, that's why, I still think volume is helpful in some ways, but I just don't look at it the way I once did. Unfortunately, I think they took that away from us with dark pools and, of course, all the options usage. But RSI 62 daily, 83 nearly on the 1 hour. That's why I'm talking about that overroll, etc. Right? I don't want to see anybody get caught. Now, if there's news that changes everything, I can't account for that. But the NASDAQ, as you would expect, very close to officially overbought at 70. We're only a point and a half roughly from there on RSI. It also has an 83 reading on the hourly. 83 reading. So you got to keep that. You got to keep that hourly in mind when you're operating in your position management. That just because the daily has room, it might need to pull back small first, and then re-energize, and then go, and then the hourly RSI will correct. The daily RSI still has room, and then you have that next push higher if the market stays intact. Only 50 because these are your smaller companies, and of course there's more risk associated with them, financial risk especially, and especially if they can't tap banks the way they normally would be able to. So that's lagging. If you want to take the laggard trade, IWM might be one for you to consider. But that, even despite really not being as enthusiastic to join the party, that is just a few ticks under 70 on the hourly. Okay, but that's not nearly as overbought. We can see that. And then the diamonds, we'll take a look at those. There's only 58.5 on daily RSI. I'm waiting for the Thinkorswim to fill in on but this is at 80 on the hourly RSI. So again, and at resistance, right? We could see you're right near, you're just got above the 50 in gold, 100 lurking for you right above. And there's also, I think, a flat line that's close to there as well that I'm kind of mousing over, that's pretty much very close to the same level. I mean, I wouldn't put it maybe dead on, but it's very close. So maybe that 334. So I think, right, that's why I'm saying if they put a big gap up to kind of put an exclamation point on the squeeze phase we've been in, I would take whatever I've overrolled, and as soon as I see any sign of weakness on the 1 minute, I'm just taking the money and running, because that would be so extreme. You would be 85, 90 on RSI potentially, and on your hourly, maybe your 2 hour, things like that. And yeah, usually it's very hard from my experience, and my experience goes back a ways, to really just keep going. There are exceptions, 99 NASDAQ was probably the best one that I can remember. But that gives you kind of that little look at things and around the market. Let's just quickly talk about what's not fully priced in, right? So we established about buybacks, we established CTAs, we talked about those. Maybe there's Fed money making it back into the market. The whole curve shift, that's getting people thinking that, right, that some people are thinking, well, that's great because rates are lower, not too far in the distant future, and that means the Fed goes into an easing cycle, and that easing cycle will ultimately lead to a bull market, and they seem to be front running that. But there's the other factor, that when the Fed does start to cut, that really usually brings on some of the worst price action. However, right, the 2023 pre-election year in terms of presidential, the seasonality, that all favors the bulls still. They might have gotten that back on track with their remarkable death-defying beats to save the market from mid-March on, right? That was in trouble, and it got saved. Still kind of, in my mind, right, you still have this bogus stuff going on where this is really not legit, but we'll look at the big time stocks and you'll see what I mean. I still would hint on housing market. To me, still remains the ultimate thing to look at, because most of the economy is the consumer, and most of the consumer spending is related to, in some way, housing and housing itself. And that to me seems like a no-go for a while, with all the factors we've already discussed. And maybe some people believe that things are fanning out into commercial mortgage-backed securities, and that would mean commercial real estate's at risk, which I can't see how you can't be somewhat concerned about that, but that's just a regular guy's opinion. I don't have a lot of information on that. So we talked about what we would do. Yeah, so the conclusion would be short-term overbought, looks really or rally primed, right? So really primed or rally primed, whatever you want to call it, to save the market yet again. That's really what things look like when we look at that weekly. And we should probably just do that on the Qs and go to the weekly as well, because we did see it a lot today on the weekly. But that, I mean, if I didn't know what the symbol was here, right, and I wasn't concerned about short-term overbought, which of course I am, I would say, look, if UOA came in on this without even knowing the symbol, I'd say I hope they're buying major calls, right at the money, slightly in the money, slightly out of the money. I hope there's a major hit in call buying, because I think this thing looks like it wants to go, right? That would be my take on it. But we know what it is. It is the QQQ, and it isn't overbought yet on the weekly. It's at 61, but it is overbought, as I said, in the short term on the hourly. So that's where our time frames, I think, are out of sync a little bit with the madness that erupted really late in the week. And so they probably need to cool things off a little bit and then see if they can hold at a good level, like I said many times, and then go. But there's your cues, and that's that view on it. You could still, right, you could have had a bear trap, right, when they took, let's go back to the daily on that. Right, you could have had this bear trap down here where it looked like all hope was lost. You were about to, you cracked below the 200-day, you were still declining, and this was only, right, a few weeks ago in March. And remember, whenever you see these reversals, when they kind of create a scary situation and reverse it, this isn't an unlikely outcome. This is what these guys do. And so that's been the case. And we could look at the same thing, really. It may be slightly different with the bear market downtrend line and the SPYs, but if I enlarge this a little bit, right, they took things below that, looked like you had lost hope, you weren't able to crack out. got it back above, held it, touched it one last time with this remarkable routine that they put in the week prior, and then right on Friday, and then look what they did, right? So it's always remarkable, right? There's just remarkable engineering that goes on, and you just wonder, I'd love to actually get the answer someday as to how all this is accomplished when you look back on it, but it seems to be done with a pretty artistic flair, deft touch. I still think, out of the blue news, right? So I think out of the blue news favors bulls. Like, in other words, if we don't get anything, there'll be like possibly pre-earnings runs that start to happen. If they think things are going to be better sooner, that could disappoint, that could enhance the squeeze, right? It just depends on, I think, what companies have to say. I can't imagine that companies will have a lot of great things to say in most cases, but the fact that they will still, if they plan to take the market higher, they will still couch that by saying that, hey, yeah, they could, it could have been worse. You'll get the old, it could have been worse routine. And that's how they roll, right? So it'll be spun that way. So let me get these pushed over, and then we'll go back to our charts, and I'll get us really the largest components in mainly the S&P and the QQQ. So here's the story in Apple on a quick view, and you could tell obviously that it's just a hair under officially being overbought. As far as the hourly goes, it's at 82, so it's definitely concerning. But if you look at it, right, it's really not that far removed overall from this. I think that may be the highest high. Let me double check by bringing some more data in for us. And I'm used to, man, I got to watch what I'm doing here. Using two different systems is really, nope, I was wrong. So yeah, this high back here is the right one. But right, that's honestly not out of the question for Apple. But if you look at it, right, can any of us deny that it's in an uptrend right now, that it's making higher highs and higher lows? The concern, of course, would be something like this kind of like rising wedge, because these tend to be dangerous. But that would probably be contingent on getting some news. But when you get something like that, that kind of oops, didn't like something I did there. I guess I must have clicked on the support part. You get the idea what's happening there now. But so yeah, I think it's overextended. I think they're likely to pull it back, but you really don't want to play games with that. If we look at a weekly chart, because it probably is the biggest one that we need to keep an eye on, just because of its weight and the kind of like psychological place that it occupies. Breaking out through there, you don't have much left. And so if they wanted to really put the pedal to the metal, as they used to say in the 70s when I was a kid, you could probably be back there and within 2 weeks from now. I mean, I'm not predicting that. I'm just saying it wouldn't take long to work their way up, if they really wanted to start putting this squeeze exclamation point on things. Microsoft, right? If we'll start out in weekly. Microsoft, things are really bogging down on me. But again, right, I look at the weekly chart here and I say it left this corrective downtrending channel, right? This corrective downsloping channel. It's made a new high, and it's very close to taking out another high in the price structure. If it does, right, then you start looking for your next levels up, and those next levels up are, it looks good. I mean, higher lows, higher highs, short-term stretched, right? So 63 daily, but 76-ish on hourly. So that's why I'm kind of arriving where I am. It seems like by the way, it seems like every time I touch these things, I regret it, right? They do something on Monday on news or something that is bad. So it's not good for me it's good that I put the ideas in during the trading week and not over the weekend, because things have tended to change, making me laugh how bad some of these things, like how bad some of the takes have been. And then news and macro news has changed everything, which is why you've got to, again, be ready for macro news. And I keep my I keep my TV on as much as painful as it is to listen to these people these days. They're just them and their obsessive admonitions and how everybody's bad because they're not doing this, that, or the other thing. It just gets way too political, and I think it should just be more about business and helping people that are interested in the market, profit from it. But unfortunately, that doesn't seem to be the focus. This is, of course, Amazon, right? We just had a flat line there. I think that flat line is ballparking it right around in there somewhere, and you're not far from that happening, taking that out, and that would be another higher low and on the way to maybe taking out this 50-week SMA and then maybe attacking. But I don't hate that, and that bigger picture pattern. And it looks pretty interesting here as well, with kind of like a mini cup and handle. It's down sloping there, but it's also made the highest high we've seen since, it looks like, January, right? And the 200's not all that far away, and the Bollinger Bands are really narrow here, which means I'm ignoring them and almost using them instead of being a possible source of concern. They're possibly a source of telling you that something dramatic could start to unfold here. And so that I just can't hate, right? It's 64 on daily. If I round it up as I should, 70 on hourly. So again, be smart about what you're doing and realize that in the short run we can see. And remember, there's a lot of turnaround Tuesdays. So they did that last week where there's an early week kind of like head fake one way, and then they reverse it strongly after Tuesday or starting on Tuesday late, sometimes. This one, right, RSI 73 on rounded up on NVIDIA on the daily, and it's at 68 on the hourly, and it's at let's see, 71 on the 2 hour, something a little different there, but still short term overbought. I'm not sure if it's going to matter because of the AI obsession, but did we look at Google? Let's look at Google. I don't think I need to look at all these, but I'll look at some of the other ones. But I mean, there's the 200, again, narrow Bollingers, been consolidating for a while, slightly higher lows, higher low cluster put in here, right near support. I think you can see there's a flat line nearby there at the very least. And so this could also launch and go, and that wouldn't take much to take out that high. And there's a gap closure back here. So you could see a nice little scamper out of this. And if they can keep this market in bullish mode, and again, a lot of factors on the one side say they should, and I would give them the benefit as of now, just because they're great at ignoring economic data, right? That the economic concerns are something that's easily ignored, in my opinion. Not because I feel that way, but the way that I've seen it over history. I mean, I think everybody, even people that are on page 3 of how to become a person that likes to read the charts, you could see the inverted head and shoulders in here. So Tesla to me has explosive potential. That above the 200 would be not only a big deal on the 200, the last SMA, but it would also take out these highs probably there shortly thereafter. And so you would have to then start looking back to the left and looking for other forms of resistance, of which there's little. And so there's a gap back here that's at 262.47. So I don't think you could rule out something like that if the April-May scenario in the third presidential year plays out. We really are about to approach the sweet spot. I don't want to fight with this stock. It is on 63, but 80.5. So short-term overbought and approaching overbought. But I really wouldn't want to pick a fight with that stock. And the interesting thing is, right, if it does really break out and go that far or further, it would leave the downtrend, right? Leave that downtrending channel behind. And so this is very interesting. You would think, though, that in a good market, this stock could really move with the way that pattern's in place. I don't know what's going on at the company, so I really can't say. Again, I don't even have time to cover as much as I'd like to. Ryan, myself, Greg, even my son Pearson, that helps out a little bit. well, actually a lot. He does it all day long, but he's got specific roles. But we're just always pressed for time, and that's just life. But there's Meta, right? And on the weekly chart, it's nearly at 70. On the daily chart, it is at the same roughly. And then let's take a look here. I don't think you can hate that though, the way that it's coming back. And I think we've been watching a gap in there, right, for some time. And I don't think that it was a further back gap. I thought we were looking at not this gap, but another one, but I might be wrong. But anyway, I think that one is let's see, 5-day. Let's see here, because I really got to wrap this up. I know like almost everybody's, oh, there you go. So I know this sounds silly right now, but if they pull off 2023 the way they could with some of the things that are out there, and if it starts out this way, if it does this, the way they're coming back after this thing, I wouldn't rule anything out. They're the masters of manipulation. If we get bad news and things revert, there's gaps down here. There's obviously a glaring gap there. So could be a really good trader, but you can see the SMAs are rounding up, right? Even the 200 has a positive slope right now. So that's usually a pretty good sign. I don't trade off of that signal or anything, but you'd rather have upsloping SMAs, I think, rather than downsloping ones, because I'd rather trade in it with the trend, and I'd rather trade in a bull market or bullish trend at the very least. Just seems easier to me. So anyway, there's Meta. And that clearly is, again, short-term overbought, and yet could have a lot more potential in the tank. Let's take a look at AVGO. And then I think I'm just going to wrap it on that, because we got to draw the line somewhere. So you're at 60 on your daily. On your intraday, you're already near 73. But let's look at this Broadcom or Avgo on the weekly. 66 on the weekly, just been a relentless march. That high, I think, is definitely within shooting distance, though. If we just look at one other thing quickly and go to a weekly chart on this, and I'll give you an idea what that weekly ATR is, and it's 32. So if we go back to our charts, you could get to if they decide to use all their energy to push higher. I mean, that is not very far removed in terms of standard deviations, given where the mean is from a 1 week push could easily get you towards that highest high, and which again is remarkable. Now, this stock is obviously showing the relative strength here is remarkable. So, this could be something that becomes if you leave this behind, you remember this goes back a ways, so that you've been consolidating. And if they look what happens when they break this thing out from consolidations, right? So if they manage to break this thing out from this kind of consolidation later this year or something like that, or maybe even sooner, that could, breaking out and taking out those highs, could really be something significant. You could have a strong March. I don't know what's going on there. It might be worth investigating. Obviously, that's organic, because I wasn't, I didn't look at that. I just wanted to show the general idea. So a lot of these big important stocks look primed to go, and they may just go right in at some point this year. I do think they're more than likely, or should in most cases, pull back a little bit early this week at the very least. Maybe there's a more substantial pullback for all I know, but I think they're primed to pull back early. And if they find a bid again and try to go, I'd get on board and see if it can continue. If it can't, it'll get stopped near the former high, just above the former high, just below the former high. If it, I'm talking about the SPY, if there is a pullback or things along those lines, it'll stop near there. You can't count out, above here. You can't count out false breakouts, this, that, and the other thing. But I think a lot of things are really primed, and I think they'll ignore the news as long as they can, because that's the way they roll. And I think barring any financial system, banking system, geopol, I think the seasonality is shaping up to let them try to run this thing after maybe a pullback of some degree, and probably starting sooner than later would be my guess under most circumstances. So, and then in the absence of news, as always. So already spent my voice here. Got to get sector situation done. So I'm going to have to wrap on that. I do hope that something I shared with you this week helps you out this week or some other point in the future. And we'll be in touch as always through all the webinars and so on and so forth. So I want to thank everybody for tuning in.